And everybody, it's Tim Reazor with Revere Asset Management, just around 3:30 here on a Wednesday night. So very quickly, stock nerds, market leaders, before we begin, I am going to desperately try not to cough. I can mute. So if you hear some momentary silence, I am absolutely fighting a cough. So I have not left you. There's nothing wrong with your video. I will just mute for a second and then away we go. And so a lot to talk with you about today. Before we go on really quickly, let's do this, the contact page. So if you have any questions, concerns, comments, take umbrage with anything that I'm saying, all you have to do is reach out to me, tim@revereasset.com, or give us a call at 855-732-5932. That's 855-REAL-WEALTH. And look, we're the only shop in the world that gives you access to people making decisions, right? Like if you want to call your mutual fund, they're not going to give you access to the traders, the portfolio manager. You go to stripmalladvisor.com. You get plausible deniability because they just have you in a bunch of lifestyle funds. And who's the lifestyle fund manager, right? Like it's just ambiguous. Just nameless people that you can't talk to ever. And so listen, you want to talk to the people making the buy and sell decisions, what goes on the watch list, what ends up in your portfolios. All you have to do is email anyone with 100 Don Alex. And then listen, even if you're not a client, we're here to help you. We're here to empower individual investors and absolutely positively take phone calls, take your emails, reach out to us. And then if you have any questions, Danny and I are working on the new website, and we're talking about there was a phrase we were tossing around, integrated planning. And so we don't sell any insurance products, but man, Danny does sure do some integrated planning, meaning that you are absolutely taking advantage of everything that's available to you, whether it's in your 401k, your IRA, making sure that you're not overpaying your taxes, making sure that you're not paying these trailing fees and uh, these annuities. I mean, if you had an annuity for the last 10 years, last 20 years, you've been paying the fee to the salesperson for the last 10 years, last 20 years. A lot of folks don't realize it. And when Danny brings it up to them and shows it to them, they are livid. And so, look, or if you've been sold life insurance and investment, Danny is absolutely positively, whether you're a client or not, the person to talk to. Call him. 855-732-5932. And now let's go back a page. So for the last, because I want to talk about the markets. Oh, real quick. Listen, easiest way to get a hold of me is Twitter, right? Twitter is how I hook you up with my DMs are open. If you want to email me, I get messages all the time. I talk to stock nerds and market lovers just like you all day, every day in the IPO Club. Unless I'm super duper busy, and then sometimes they're just silent. It's not a place that we're exchanging tips. They're talking tactics. They're taking what was discussed maybe in a Hunter video, what Danny said on the podcast. They're batting it around. Strategically, they're looking for their edge, and they're discussing what gives them an edge in the markets, because that's what we do here, right? Like we find an edge in the markets. I'm a probabilistic trader. I'm not just buying and holding. I'm actively trading, and so what gives you an edge in doing that, or is it just guesswork, right? And so absolutely defining edge in that IPO Club is I think interesting. It makes me better because the questions that are asked, they're not asking me, like they're asking each other, and I'm just observing. And it's interesting because I think it makes me better because the questions you ask, I always felt that when I worked at IBD, when I go on the road and I meet people, the questions I was asked forced me to really articulate and think about things and how to present them in a way that, or what was I doing and why was something working or not working. And so I think it's one of the best learning resources we have because it's like-minded people consuming our content, and then we get to ask questions. So any questions on that, just email me, tim@revereasset.com, or find me on Twitter. But listen, stock nerds, market lovers, here's the thing. Oh, no, I want to go back to the reverse set. For the last couple of weeks, I have been saying, here we go. What have I been saying? This is where to short the market next. And then this got forgotten. Bullish watch list ideas. I've been doing this. Let me show you on the charts where I've been doing this. This is September 29th. But let me show you on the S&P chart where I've been doing this from. So here is the beginning of September. You can see here's 9-6. You break the 21, you resist the 21, and you go down. And I just happen to have the video on Wednesdays when a lot of this stuff is happening. Another opportunity to short the market, and it goes down. Document that in the video. Another zone to short the market, and it goes down. It doesn't take this out. And then here's last week's. And last week's, I think it was wearing folks out because this is where I heard consternation from some folks. And I always say, if you feel any umbrage, reach out to me. And so what a lot of people don't realize about me, and especially if you're newer to my work, like it's not about being right or wrong. Like A lot of people with politics, it's right or wrong. Many people don't go from Democrat to Republican or Republican to Democrat. You're on one side or the other. High school football rivalries. I like East. I'm a fan of West. Most people don't just navigate the world. It's always black and white, one side or the other. It's not how I approach markets, and I don't think it's healthy if you approach markets in that regard either. And so, because that allows you such inflexibility, and what happens is if you have the right or wrong approach, though. Oh, I'm going to try to mute this. I don't know if I'm going to be able to. Give me a second. Yeah, I could not mute. Let me see if I can mute. Okay, I'm back. I coughed. It's over. So if you approach the markets in right or wrong, like what it doesn't allow you to do is to be wrong and just move on. Like so many times, how many of you at home and everybody, so everything I'm saying is just a hard learned lesson. Believe me, I am not speaking to you from on high. If you've ever lost money sticking to a position way too long, raise your hand, right? And so how do you get over that? Well, you learn to kind of like just flow with the markets. And how many of you wait to take off a position so you just get back to even, and you're missing all the other opportunities in the world? And or you're beating yourself up, and you're as Danny likes to say, you're playing yesterday's football, last week's football game today, and that's not going to score you any points. Pretty sure that's what he says. I might have butchered his saying, but what happens is so I said the next shorting opportunity, because here was my Wednesday video right here on this day. And I said, there's either a chance we come down and try to challenge or take out those lows, or you're going to make your move up into this zone. And this is the next zone to short the markets. And you can clearly see that what happened here. Yeah, he just zoomed on past that. So you get one close, and clearly two closes above the 21. I mean, that's clearly not a working trade. So you're gonna harp on it. You're gonna beat yourself up. You're gonna stick in it. No, you're going to trade egoless. So many people, it's interesting that these, after the market has worn you out, right? It wears you out. It wears you out. And here comes little Timmy saying, "Hey, you know what? If it goes up here, this is probably another shorting opportunity. If it's not, you didn't hear the right. Some of you just tune out like right when I say it's another shorting opportunity. You're going to want to end the trade, right? And while it doesn't do what it did the previous 3 times. It actually follows through and it keeps going higher. So instead of worrying about because that aspect, like he was wrong or you were wrong or I was right and he was wrong, like whatever that is, that's all your ego talking, and that ego will destroy your portfolio. If you let your ego always kind of manages you, but if you don't manage your ego, it's going to absolutely destroy your account. It's going to destroy your psyche, and I think you're focused on the wrong things. And anyone who's heard my work has heard me say investing is 90% psychology. And so what is just having some rules or trigger events allow you to do? Okay, well here on a daily chart, 521 cross, 821 cross, all kind of happening here. Okay, those are trigger events. Well, those are momentum events. Okay, we get one close, two closes. Okay, well, Tim was clearly not right here. Just because I was right here, here, and here doesn't mean I'm right here. And so, yeah, who really cares? Right? Like what you want to be is on the right side of the trade. And so what happens though is so many people, let's look at the NASDAQ. So many people are focused on every day squeezing every last nickel out of the market. And I do believe that that's the wrong approach. Like the market's going to be here tomorrow. And the next trade isn't going to make or break your year. It's going to be an amalgamation of trades and a process and a system that allows you to manage all of your emotions and all of the things that you're seeing on the charts. And so here's the NASDAQ. Here's Wednesday's video last week. One close, two closes, and clearly you're now there. Now, what I will say, a couple things are interesting to me here. As we look at the NASDAQ, you come up to this 786 and you've paused. Okay, well, that doesn't mean you can't keep going, but it's interesting that you've had Netflix, had the tremendous move before earnings, and now you can see reported earnings last night and just down to the 21. This is no big deal. What's Tesla doing? Like, I think a lot of the moves have been baked in, but we'll see. Tesla's super strong for so long. And here you go, Tesla at 862. I mean, come on, that's peanuts, right? And so it'll be interesting to see what Tesla does the rest of the week. You get these big tech stocks reporting next week, Amazon, Facebook. You get all the biggies coming up here in the following 7 to 10 trading sessions. And so yeah, it's probably going to set the tone. Well, where are we on the ATR charts? And what's going to set the tone going into the end of October? So let's look at where we're at, excuse me, with the S&Ps. So, wow, you're at 2 ATR. And so when is the last time you got beyond 2 ATR without a little bit, just a hint, a smidgen, you say, of a pullback? So here, and by the way, if you're new to my work, this is the mean, oops, excuse me. Let me see if I can do that right. The mean of the market is based on what? The 21 exponential moving average, or the ATR. So that's the mean. That +1, +2, +3 average true ranges gives you a true representation of overbought or oversold. Instead of saying the market is overbought, you have now a graphic to look at, something truthful, because it's fact. Price is truth, right? Price is fact. And so now we can see when we are 2 of these time periods, how often do we get to 3? So S&Ps go to 2 here. Now that's the August time frame, just good enough for government work. The July time frame. What is this? The May time frame. Oh, 3 ATR back in April. And so got 3 ATR back in April. It doesn't happen that often is the point. So would I look for maybe a move back to this +1 or to the mean? Yeah. Doesn't have to happen? No. Could you consolidate right here? Could these lines catch up? Absolutely. But understanding where you are in time and space, having some situational awareness stops you from doing what? Chasing markets. And it's still October. Did this whole thing on the podcast last week. Just how tough Octobers are going back 2000, 2001. Let's see, and it's in here. I don't know if Danny types these up, so sometimes they have really nothing to do with what we talked about. Like this was just something we mentioned in the show. Yeah, we should probably get better. Danny's shirt though was exceptional. That was something we absolutely did talk about in the show. But anyway, you can see how hard Octobers are. Does it have to follow that pathway? No, but at +2 ATR, let's see what the NASDAQ is on the ATR charts together. Let's see here. Yeah, well, NASDAQ is always a bit stronger, but +3 ATR. Let's see, October, it's July. Let's see if I can find some more. I have to auto zoom this. Let's see. NASDAQ will go further typically than the S&Ps. 3 ATR back in September of last year. Here's last year's October, right? Yeah, 3 ATR back in July, 3 ATR back in September, and then all the way down to -3 ATR. You're at a 76, you're at a pausing point. So if the market's going to start to retrace a little bit, it's probably going to be here. And so does that mean you go short it with a band? Did Tim say short? Just said he's probably going to pause here. What will get me thinking short? What would get me thinking that? Well, let's take a gander, right? So let's get our old handy dandy IPO Club white bar chart out, and let's see. Well, what would be that setup on the NASDAQ? So here is the beginning of September, comes down to 21, holds serve, and then it breaks, right? That's 1 close, 2 closes. So the next natural point to short isn't really here. It would be that retest of the 21. And then you look for it to roll over. So what would happen? Would you short it here? Because I mean, you could get the reversion to the mean, but remember, you're not looking to. Is it probabilistic that happens? I don't know, I mean, maybe, but you could wait for a break and then a retest and then one of those, but it takes patience to do that. And so you're at a natural pausing point. Instead of shorting, maybe that stops you from being aggressive, because you don't have to be aggressive all the time. And so what's your edge and where does it come from? And so anyway, that a lot of that has to do with knowing who you are as an investor and as a trader. If you're a buy and holder, like I said on the podcast on Friday morning, none of this matters. But if you're actively trading, actively managing, yeah, You know, okay, well, it doesn't matter what we're doing, doesn't matter what month and time and space. I get a 5-8 cross, a 5-21 cross, an 8-21 cross. I buy the hell out of those. Fantastic. That's your rule. That's what you do. But I do believe in a trigger event, and those trigger events typically lead to higher prices. They don't always, but they typically do. Now, back to the point when I said some bullish things in September. So let's look at ETH. Ethereum, right? And so back at the end of September, right, here's 9:30. How would you think this is so great? And you could make fun of me saying, Tim, that was the same thing that happened on the indices. And it did. Let's go to the weekly, right? So here's Ethereum, September, right at the end of September, found support here. And then away you go. I don't know if you get up to 4406. I mean, you're at 4100. I mean, is that good enough for government work? ATR chart, you're not really at that 3 ATR, you're at +2 ATR. How about the Bitcoin? I said the same thing about Bitcoin. BTC on the weekly chart still. So let's go back here, my friends, to the old white bar. Same thing. Okay, 21 hold, the mean holds, pull back to the mean. And so again, Tim, why wouldn't you say the same thing with the indices? Indices are just, I've just had some really bad Octobers. And so maybe the ghosts of Octobers are getting me, but knowing who you are as a trader and investor and learning from your past, it helps you. And so I think that's what my edge is. And so believe me, only you, unless of course you're a client, are responsible for your trading and your decisions if you're an individual investor. And you take that onus, and whether you're right or wrong, it's just every day is another decision. You get another card. If you're thinking in poker terms, you get another card, and you just know the deck a little bit better. But right now, like Bitcoin's had this huge run, probably get a huge lot of attention. Doesn't mean it can't squirt higher here, but yeah, it's almost at +3 ATR. And even Bitcoin goes at +3 ATR. Eventually it corrects back, but I mean that's just a huge run, corrects back, and now you had a huge run. I don't know where you correct back to, if you correct back at all, or do what? Just consolidate. And granted, we are on a weekly time frame here. So look, I hope that helps. Oh, I didn't cover what's going to dictate things here. That I do want to cover. I think it's going to be this. Let me show you what's going to dictate the next few, let's say 7 to 10 trading sessions. It's the Dixie. And let me show you. So the Dixie's broken, not broken down. It's broken below the 21. And so look, where do you see? Let me just show you this correlation. 1013, right? Where do you see S&Ps and Nasdaq getting positive? It's going to be right in here, right when the Dixie starts coming lower, when the dollar starts coming lower. Don't believe me? 1013. There's 1013. Wouldn't you know? That's the bottom. And there you go, you start making that reversal. And so if you listen, those who listen to me closely heard me say, if it breaks out higher from this day, markets are probably going to get crushed. Now, if it goes lower, markets probably going to go higher. They've done that. So now a couple things here about this. You're at this level of support. If it goes lower, if the Dixie continues to break lower and it wants to come down here and test the 50-day simple, yeah, markets are going to grind. They're going to grind higher. So take that into account. But if this is where they find support, and I don't know if this is where it finds support, on the weekly chart, where are you at? You're at the 8. And so that is that's support. And so if the dollar were to find support here and try to just trade up higher back to 94.62, you're like, Tim, that's not a big move. That's a big move for the dollar. Yeah, you're probably going to see markets at the very least pause. So and the dollar isn't going to have a positive correlative effect with what? Interest rates. So let's look at TNX. Let's get a daily chart going. So here's the 10-year yield. Let's see. Yeah, I mean, you're not seeing much give back here. They tried to pull back to me. This market's tracking the dollar, even though the yields have been higher the last 1, 2, 3, 4 days. Markets have not cared. They're tracking the dollar. So I'd follow the dollar. If you want to know the next move in markets or what's probably going to take shape, the dollar. The dollar is going to drive a lot of this train. Hopefully this all helps. Look, I'm always here. Let's see, Tim at revereasset.com. I was wondering here, Tim at revereasset.com. Email any of us. At TJ Reazor is how you find me. And hopefully you can join us. We're doing the podcast early. So tomorrow, Tomorrow morning is Thursday. We're going to tape the podcast early, get it out Thursday, or at the very least, very early Friday morning. And so you'll have all that content to consume early. And so with that, I hope you have a great night, and I will see you at the next update.